Okay, I'm going to read the rest of the Fair Credit Reporting Act. I'm within letter H, which was about affiliate marketing opt-outs, and I'm on paper page 128 of the old text. And at number 13, within affiliate opt-out, which is the means of opting out, banks may not use eligibility information obtained from an affiliate unless the consumer is given a reasonable, simple method of opting out, including providing checkoff boxes on a reply form, including a reply form and a self-addressed envelope with the opt-out notice, providing an electronic means of opting out, providing a toll-free number to opt out, and allowing consumers to exercise all opt-out options at the same time by a single, simple method. Unreasonable means of opting out include 1, 2, and 3. 1. Requiring the consumer to write his or her own letter. 2. Requiring the consumer to write for an opt-out form rather than including it with the notice. And 3. Requiring a consumer who receives a notice on a website to opt out using only a paper method or to opt out on a different website without providing a link to the site. Delivery of the opt-out notice. The opt-out notice must be provided so that a consumer is likely to receive it. B. Methods that would reasonably be expected to deliver actual notice include hand-delivering a printed notice to the consumer, mailing a printed notice to the consumer's last known address, emailing a notice to a consumer who has agreed to receive electronic delivery of disclosures, posting the notice on the website where the customer has received a product or service and requiring the consumer to acknowledge receipt of the notice. And methods that would not reasonably expect to provide an expectation of delivery include posting the notice only in a sign in the branch or in the newspaper, sending the notice in an email to a consumer who has not agreed to receive notices electronically, or posting the notice on a website but not requiring the consumer to acknowledge receipt of it. Renewal of opt-out. After an opt-out period expires, a bank may not make solicitations based on eligibility information received from an affiliate unless the consumer has been given a renewal notice and a reasonable opportunity to opt out, and the consumer does not opt out. Reasonable opportunity is just about 30 days. And a couple of other points, but 30 days basically. The exceptions to the general opt-out rule apply, and the renewal opt-out notice must be provided by the affiliate that provided the original notice or its successor. D. If a joint notice was provided originally, the renewal notice may be provided jointly by the same affiliates or their successors. Let's turn the page out. The affiliate marketing renewal notice must be clear, conspicuous, and concise and contain the name of the affiliates providing the notice or the name of the family of companies. If the affiliates do not share names, then each name must be provided. A list of affiliates or types of affiliates who use the eligibility information is covered by the opt-out. A general description of the type of eligibility information that may be used to make solicitations. For a notice that the consumer previously decided not receive these solicitations. 5. A notice that the consumer's election has expired or is about to expire. 6. A notice that consumer may renew the election. And 7. The duration of the opt-out period, and a notice that the consumer will be given an opportunity to renew at the end of that time. F. Timing of the renewal notice. The renewal notice must be sent a reasonable period of time before the expiration of the original opt-out period and any time after the expiration of the opt-out period, but before any solicitations that would be prohibited are sent to the consumer. G. Opt-out periods may not shorten by sending renewal notices before and the period is up, even if the consumer does not renew the opt-out election. And H. Opt-out renewal notices may be consolidated with other notices such as the GLBI privacy notice. Other requirements: credit and debit card numbers. Persons who accept debit or credit cards may print no more than the last 4 digits on the card of the card on any paper receipt provided to the customer at the time of the transaction. This rule does not apply to handwritten receipts or those where the card is copied or imprinted. So we just moved on to others. The list, Roman numeral section before enforcement, I think. B, information required to be given to victims of identity theft. Any business that has entered into any transaction, including providing credit, or that has accepted payments from a person who has allegedly made unauthorized use of consumer's identity must provide within 30 days of the request, and subject to verification of the identity of the person making the request, documentation of the transaction to both the victim and law enforcement agencies. 2, the business may require that the request from the victim be in writing, be mailed to an address specified by the business entity, and include at the option of the business any relevant information about the transaction of which the victim is aware. 3rd, the information must be provided at no charge to the victim. The alleged victim may be required to provide the following items before receiving the documentation: providing positive proof of identity, government-issued identification card, personally identifying information as was provided by the unauthorized person, and personally identifying information as the business entity normally requires for new applicants or new transactions under the bank's customer identification program. Proof of the claim of identity theft, including, as applicable, a police report, standard affidavit of identity theft, and affidavit of fact that is acceptable to the business for such purposes. The business may decline to provide the information if, in good faith, the business does not believe the request is covered by the FCRA. The business does not have a high degree of confidence that it knows the true identity of the person making the request, and the request is based on a misrepresentation of the facts, or the information requested is internet navigational data or similar information about the person's visit to the business's website. C, disclosures of furnishing negative credit information. Financial institutions that extend credit regularly and furnish information to consumer reporting agencies must provide to the consumer a notice that it has furnished negative information to the consumer reporting agency. The notice must be provided either before or not less than 30 days after furnishing the information and to the consumer reporting agency. The notice, right. If the notice is provided at the time of the loan, it cannot be given with an initial open-end truth of lending disclosures. So it has to be segregate from that, but it really can be given at the beginning of the loan term. It can be given any time before the information is furnished to the credit reporting agency if it's not given at the origination. And the notice may be given on the notice of default or billing statement or other document, but not with the initial open-end truth and lending disclosure. So it can be, and I think in most cases it's on like the monthly periodic statement, I'll say. D, credit scores used by mortgage lenders. Mortgage lenders and brokers that use credit scores must provide to the consumer either the credit score developed and used or a score developed by the consumer reporting agency, even if it used its own proprietary internal credit score. 2, if the mortgage lender uses a non-consumer reporting score, agency score, such as the consumer reporting agency score, along with explanations and other required information about the consumer reporting agency score. What? That's a fragment. In addition to the credit score, the creditor must provide a range of possible scores if provided by the credit score maker. All of the key factors that adversely affected the credit score in the model used, limited to 4, unless the number of inquiries adversely affected the score, in which case 5 factors should be disclosed. And C, the fact that the date the credit score was created if provided by the credit score maker. The name of the person who provided the credit score or the file based on which the score was created, a statutory notice explaining credit scores. Now I'm on to letter E, which is use of medical information. So, covered medical information includes all information, oral or recorded in any form, created by or derived from a healthcare provider or behavioral health or condition, or the consumer that relates to past, present, or future physical or behavioral health or condition of a consumer, provision of health care to a consumer, or payment for the provision of health care to a consumer. Covered medical information does not include age or gender of the consumer, demographic information about the consumer, including address and email address, and any other information about the consumer not related to health issues, including the existence or value of any insurance policy, and lastly, information that does not identify a specific consumer. Requirements under the use of medical information. The general rule is that a creditor may not obtain or use medical information pertaining to a consumer in connection with any determination of the consumer's eligibility or continued eligibility for credit. The phrase eligibility for credit means the consumer's qualification to receive or continue to receive credit, including the terms on which it is offered. Eligibility for credit does not include any determination of the consumer's fitness for employment, insurance, or other non-credit product or service. B. Authorizing, documenting, or processing payment for a consumer in a manner that does not include determining the consumer's eligibility for credit, and maintaining or servicing the consumer's account in a manner that does not include determining the consumer's eligibility for credit. Financial information exception. A creditor may obtain and use medical information in connection with a determination of the consumer's eligibility for credit as long as three conditions are met. 1. The information is a type of information routinely used in making credit eligibility determinations, such as debts, income, expenses, assets, purpose or proceeds of the loan or collateral, or the creditor uses the information in a way that is no less favorable than it would use any comparable non-medical information, and the creditor does not take into account the consumer's physical, mental, or behavioral health condition or history, type of treatment, or prognosis into account as part of such determination. God, this is still going on. For example, a creditor can consider any medically related debt of the consumer for purposes of determining the consumer's repayment ability. However, the creditor cannot treat debt owed to a hospital less favorably than debt owed to a retail store when considering the consumer's credit history. Specific exceptions. A creditor may obtain and use medical information to determine a consumer's eligibility or continued eligibility for credit in the following cases. 1. To determine whether the use of a power of attorney or legal representative is necessary when it is triggered by medical condition. 2. To comply with requirements of federal, state, and local laws. 3. To determine, at the consumer's request, whether the consumer qualifies for a legally permissible special credit program established pursuant to a written plan for persons with medical conditions. The plan must identify the class of persons to which it applies and must set forth procedures and standards for establishing credit to prevent or detect fraud, to determine the medical purpose of the loan and use of proceeds in the case of financing medical equipment or services. 6. To determine the consumer's eligibility for credit if the consumer or his or her legal representative requests that medical information be used. 7. To determine if the provisions of a forbearance practice or program that is triggered by a medical condition will apply to the consumer. And to determine the consumer's eligibility for credit insurance product, or to determine whether a medical condition is a triggering event under the terms of a credit insurance policy. Use of unsolicited medical information. A creditor may use unsolicited medical information to determine a consumer's credit eligibility to the extent that one of the above listed exceptions apply. E. Limits on redisclosure of information. A creditor receives medical information pertaining to a consumer from a credit reporting agency. The creditor may not redisclose the information to any other person except as necessary to carry out the purpose for which the information was initially disclosed or as permitted by law. Sharing medical information with affiliates. Creditors may not share medical information with affiliates when that information consists of an individualized list or description of the consumer's transactions for medical products or services, and an aggregate list of customers based on payments for medical products or services. Creditors may share medical information with affiliates in connection with the business of insurance or annuities for purposes permitted without authorization or pursuant to the Health Insurance Portability and Accountability Act, HIPAA. If the medical information can be obtained or used under an exception in the rule, if the exception in the GLB privacy statute applies to the medical information being shared. Furnisher rules, letter F under other. Coverage. Furnisher rules cover entities that furnish information relating to consumers to one or more consumer reporting agencies for inclusion in consumer report. The exemptions are entities that provide information to credit reporting solely to obtain a credit report on a consumer, or entities that are acting as a consumer reporting agency. Further, entities requesting credit information from consumer reporting agencies, that was just stated. Consumers to whom the information applies, neighbors, friends, acquaintances, or business associates of a consumer who provide information about the consumer to a consumer reporting agency in response to a specific request. 3. Reasonable policies and procedures. Furnishers must establish and implement written policies and procedures regarding the accuracy and integrity of information related to consumers that it furnishes to consumer reporting agencies. Policies and procedures must be appropriate to the size, nature, and complexity of the institution. Furnishers must consider the following guidelines when developing policies and procedures. See Appendix E. This includes the nature and scope and objectives. Under nature and scope, there's a type of business the furnisher is involved, the nature and frequency of information reported, technology used to report, objectives include furnishing accurate information to consumers, furnishing information that has integrity, conducting reasonable investigations of disputes and taking appropriate action based on the outcome, and update information to reflect the status of the consumer's account. Implementing policies and procedures. When establishing and implementing policies and procedures, the furnisher should identify practices or activities of the furnisher that can compromise the integrity or accuracy of consumer information, such as reviewing historical records relating to accuracy and integrity of information in consumer disputes, reviewing existing practices and activities, including technologies and timing, considering feedback received from consumers, consumer reporting agencies, and others. And if there's more than one page, there is. Going to keep reading. Obtaining feedback from staff, evaluating the effectiveness of existing policies and procedures and consider whether they should be modified, evaluating the specific methods, including technology, used to report information to consumer reporting agencies. G. Considering potential impact of the furnisher's policies and procedures on consumers. D. Specific components of policies and procedures. Furnishers should address the following 1 through 14. 1. Establish a system for reporting consumer information that is appropriate to the institution's nature, size, and complexity. 2. Use of standard data reporting formats and standard procedures for compiling and reporting information. Roman numeral 3. Record retention requirements. Roman numeral 4. Appropriate internal controls to maintain the accuracy and integrity of the information. 5. Training staff that participates in compiling and reporting consumer information. 6. Providing for oversight of relevant service providers. 7. Furnishing information following mergers, acquisitions, and portfolio purchases. 8. Deleting, updating, and correcting information in the furnisher's records. 9. Conducting reasonable investigations of disputes. 10. Designing technological and other means to communicate with consumer reporting agencies to prevent duplication and errors. Providing sufficient identifying information to consumer reporting agencies. Conducting periodic evaluation of its practices and complying with the Fair Credit Reporting Act and its implementing regulations. Furnishers must review and update policies and procedures periodically. Duty to investigate. When a consumer submits a dispute directly to a furnisher related to information submitted to a consumer reporting agency, the furnisher must conduct a reasonable investigation if it relates to a credit account or other debt with the furnisher where the dispute involves identity theft, fraud, or unauthorized use of the account, the terms of a credit account or other debt with the furnisher where the dispute is related to the type of account, principal balance, payment, or amount of credit. 3. The consumer's performance concerning an account or other debt with the furnisher where the dispute relates to the current payment status, high balance, date a payment was made, the payment amount, or the date an account was opened or closed, and any other information on a report regarding the consumer's relationship with the furnisher that bears on the consumer's creditworthiness, credit standing, credit capacity, character, general reputation, personal characteristics, or mode of living. The requirement to investigate does not apply if the dispute relates to a consumer's identifying information such as name, date of birth, social security number, telephone number, or address, the identity of past or present employers, inquiries or requests for a consumer report, information derived from public records such as judgments, bankruptcies, and other legal matters, information related to fraud and active duty alerts, information provided by another furnisher. Furnishers have no duty to investigate if the furnisher has a reasonable belief that the dispute is prepared on behalf of the consumer or submitted on a form supplied by a credit repair company. Address requirement. Furnishers are required to investigate disputes only if the consumer submits a dispute to the address of furniture provided by the furnisher on a report, the address of the furnisher established for submitting direct disputes, and provided to the consumer, or any business address of the furnisher if the furnisher has not provided the address for direct disputes to the consumer. So that's direct disputes, but a customer can make disputes indirectly through like credit reporting agencies that have to be respected. So this is almost redundant. Or irrelevant. Required content of direct dispute notices must contain sufficient information to identify the account, the specific information the consumer is disputing, and the basis for the dispute, and all supporting documentation required by the furnisher to substantiate the basis of the dispute. F. Duty of furnisher after receiving a notice of dispute. After receiving a notice of dispute, the furnisher must conduct a reasonable investigation, review all relevant information provided by the consumer, complete the investigation, and report the results to the consumer within the deadline required by FCRA, generally 30 days from the date the furnisher received the notice of the dispute. If the furnisher determines that the information was inaccurate, it must promptly notify every consumer reporting agency to which it reported the inaccurate information and make any necessary corrections. For frivolous or irrelevant disputes, there is no duty to investigate. The furnisher is not required to investigate a direct dispute that the furnisher has determined is frivolous or irrelevant. The dispute can be considered frivolous or irrelevant if the consumer did not provide enough information in the notice to investigate, and the dispute is substantially the same as one submitted previously and by the consumer unless it contains required information that was not previously provided. The notice of determination timing. The furnisher must notify the consumer within 5 days of making the determination that the dispute is frivolous or irrelevant. And contents of the notice of determination must include the reasons for such determination and identify any information required to investigate. The record retention section, subsection 7. For employment purposes, records of recipients of reports must be retained for 2 years. For other purposes, records of recipients of consumer reports must be retained for 6 months. Under enforcement, the civil liability for willful noncompliance is actual damages, court costs, and attorney fees, and punitive damages. Civil liability for negligent noncompliance is actual damages, court costs, and attorney's fees. No private right of action for duty to provide accurate information for the ID theft red flag provisions or the requirements to make information known to ID theft victims. And there's no civil liability for notification of negative credit report requirements or for the risk-based pricing notice. C. Unauthorized disclosure. Any officer or employee of a credit reporting agency who willfully provides information on a consumer to an unauthorized person can be fined up to $5,000 and or imprisoned for up to 2 years. D. Obtaining consumer reports under false pretenses. There's civil liabilities, penalties for any person who obtains a report under false pretenses or without a permissible purpose. They may be liable for actual damages or $1,000, whichever is greater, and criminal penalties involve a person who knowingly or willfully obtains information from a consumer reporting agency under false pretenses, and they can be fined and or imprisoned for up to 2 years. The statute of limitations is civil action can be brought against a consumer reporting agency or used for user for a period of 2 years, and all institutions should maintain evidence of compliance with disclosure requirements for at least 2 years. There's regular FCRA penalties and criminal liability fines up to $5,000 and imprisonment for 1 year.